Hello, everyone. Charles Russell, broker with Russell Realty in downtown McKinney. A lot of our clients have mentioned that they have concerns about the current real estate market, so let's tackle this head on. First, we're diving into the latest trends in single family home prices as reported by the Fannie Mae Home Price Index. From the third quarter of 2023 to the same period in 2024, we saw home prices increase by 5.9%. Now, while that is still solid growth, it's a bit slower than the 6.4% increase that we'd seen from the previous quarter. So prices are still trending up, but at a slightly more moderate pace. This index specifically tracks prices for single family homes across the US, excluding condominiums, which gives us a pretty clear view of overall trends in the residential housing market. Seasonally adjusted prices rose by about 1.3% in the third quarter of 2024. Again, a touch lower than the 1.4% growth that we had saw previously. This gradual slowing indicates a market that is still resilient, but easing just a bit. According to Mark Pella, Fannie Mae's senior vice president and chief economist, limited housing supply, especially among existing homes, has been the primary factor holding prices up. Despite mortgage rates dropping significantly to around 6.2% in September, home buying activity stayed mostly flat nationwide. The market still faces challenges with high prices and affordability issues, even with those lower rates coming in. Interestingly enough, this adjustment follows the Federal Reserve's recent interest rate cut, which lowered mortgage rates for a time, helping to boost the number of homes coming onto the market. But we have since then subsequently seen rates rise again, nearing 7%. And this has led to a notable increase in housing inventory with a 34% rise in homes for sale and a 22.9% increase in unsold homes year over year. With more homes on the market, sellers have begun to feel the pressure to reduce prices to stay competitive. So, what does this mean for buyers and sellers? For buyers, there's now less competition and price reductions are more common. This could help lead to finding a better deal. In fact, what we are commonly hearing from leaders in the real estate industry is that this is likely a unique opportunity and a short window of time for buyers to find properties that they really like. There's just more available to choose from and be more aggressive in the negotiation process on the pricing because, as many investors agree, money is often made on the property when you buy the property, not when you sell it. Many sources are forecasting interest rates in the fives next year, which they believe will restart the market and increase competition with other buyers, ultimately increasing prices. So, if you're a buyer, I would highly encourage you to give this serious consideration. You don't want to be looking back and thinking, if I had only bought when homes were cheaper. Now, if the presidential election is holding you back, just know that historical data shows that elections don't have that significant an impact on the housing market long term. Yes, I get it. There's a lot of fear generated in a time like this. But just remember what Warren Buffett said in a 2008 interview with the New York Times. A simple rule dictates my buying, he said. Be fearful when others are greedy, and be greedy when others are fearful. For sellers, it means that pricing your home strategically is more important than ever before, as there are now more options available to buyers. In many parts of the country, it's a price war and a beauty contest. Your home needs to be top shelf, ready to move in, and repairs and updates made to outshine your competition and sell your home for top dollar in this market. Many of our sellers this year have sold their homes at or even above list price simply because they followed our advice and they set themselves up to maximize their sales price in the current market. Keep in mind that as a seller, you are in many cases also a buyer and you are selling in the same market that you are buying in. So you can also take advantage of this unique opportunity as I described it previously and potentially capture new equity in the home you are purchasing, even if that means getting a little less equity from the home you are selling. And the hope, of course, there is that the two will offset to some degree. So I hope this information has helped shed some light on our current market. Our experienced top producing agents here at Russell Realty are ready to guide you through and help you make the most of this market. So contact us today to get started. We look forward to helping you with your home.